Hello, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 17th. I am recording it Sunday night on the 16th to get this on out to you. I'm using Friday morning's update because the pulse has not been released yet. But last week, our market was up 1.4%, gained another 0.5% on Friday. A big rebound. And the reality is, it seems to be coming in with technology. NVIDIA, Roku, and Expedia Group provided some bullish-minded support. It seems like technology is pushing our markets higher. It looks to be, if you just take a peek at it, chips are back in favor. Big technology such as Amazon's back in favor while Google's not. Facebook is sideways, Apple is sideways, and I think we're going to see Baidu, obviously, with their pre-announcement, should start going higher. So pretty interesting that we're obviously fighting the fear of a coronavirus. And for all intents and purposes, a lot of people are running back and forth in their portfolios. What I want to talk about today, I'm going to wait till next week and talk to you guys when I can do it live. But I want to go over strategy. And our strategy equals collar trade or adding protection during the more volatile times in our markets. Now, we don't ever tell you we're going to catch tops or bottoms of bottoms, but thank goodness we kept some positions on for protection. Thank goodness we're looking at Disney put still in place. Thank goodness we're watching and looking to take profits on our puts from Apple, which we did, Visa, which we did, Baidu, which we did. We did a really good job taking those profits. Now we still have some protection on Disney, on Facebook. We took, as you listened last Thursday, we took protection off of Under Armour and got a pretty good bounce off support. But again, we're making our best educated decisions on what's happening. And more important, we are not day trading the noise that is out on every single new headline. Again, as I spoke before, and I might put it in here at the end, the coronavirus right now is not worrisome to me. I really should. I'm going to add a link in here to 11 minutes of Kramer and him speaking about how the flu has already killed 12,000 people here in the United States in the start of this flu season, which I think starts mid-November. And we're worried about, 5 coronavirus outbreaks here in the United States, and that, 1,000 people have died worldwide, or 0.1% of the population in China has died from it. When here in the US, we have on average 29,000 deaths a year from the everyday flu, and it seems like it's being blown out of proportion. I obviously have no medical background to make a decision on what's going to happen and why, but I'm also not worrying about the big pushes or worries, I guess, and what I see coming up in the markets. I just don't see it. And I know there's talk that, oh my gosh, 42 Apple stores are closed. Well, with all due respect, all of Apple's online stuff is done. It's been forever since I went to an actual store for an Apple product. I ordered online. So I don't know if some old cogger like me is still doing that. I'm just not sure what real worry there is in our markets and how this is going to affect us. Now, I guess what I'm trying to say is if you try to trade every single headline, if every single headline you're trying to focus on, oh, I got to do protection here and protection there, you're completely forgetting about any type of technical analysis. And one day you're not going to get a confirmation on a crossover. On one day you can't get a reverse and a confirmed reverse in your trend. And each day with that the news, plain and simple, people who are day trading the news are getting their butts handed to them the next day because we're just all over the place, and it's a problem. It's a worry. It's why we have found collar trading and why there has to be a better way to do it, because in all honesty, it's just too tough to outguess the markets on a daily basis. It just won't happen. So, with that said, if I can tout out one thing, the protection on positions allows you to have better patience and make a less stressful decision. I'm not saying all the decisions are always correct. I'd be insane to say that. But I can tell you, having a longer time horizon allows you the opportunity to be wrong, allows you the opportunity to take things in stride. So let's hear it for protection. Let's hear it for having less stress on your trading decisions. If you ask me where I think the markets are going to head this week, I'm going to say higher. I still think we're going to be melting up. I still think we're looking for more movement to the high side. As you look at a chart, it would not surprise me to see the Dow test 30,000. We're 600 away. I think that's where we're going to melt up and have a little bit of test here in the next week. And when we get up there, I'd expect a breather in it to fall back from it. S&P, little bit different. The S&P is looking more to test that 3,500. It is bullish. I'm not sure it's going to quite get there. With other than Walmart this week on earnings, I don't see a stimulus to push the S&P up to the 3,500 level. That's only 120 points. It's only, what, 120 points, 3.5%, maybe 4% to the upside, 3.5%. I just don't see it in February. And then the NASDAQ, already oversold. I really want to tell you we're going to go test 10,000 here. Again, I don't see it. There's not enough earnings coming up in the NASDAQ that's going to push us higher. I don't see Geld. I don't see Walmart. Mosaic, NetEase on Wednesday, Garmin, First Solar, Newmont Mines, Deere on Friday. There's just nothing here that'll push the NASDAQ any higher. It's going to have to be some type of rebalancing of funds that'll move the NASDAQ to higher levels. Earnings pretty quiet again, except for Tuesday. Yeah, Walmart. I think that'll be the big one that really can move our markets. But I'm pretty sure Walmart is after hours, so might move us on Wednesday. Markets closed on Monday, Tuesday, NAB Housing Price Index and Empire. Wednesday, PPI, housing starts, building permits, and the FOMC minutes. So Wednesday, we might have a muted day until we see the minutes. And based on the comments that are made, we might see our markets go higher. Philly Fed leading indicators with the continuing issuing claims on Thursday, and existing home sales on Friday. Not much to move our markets there. Internationally, we have the China Housing Price Index for Monday and the China interest rate decision on Thursday, which should move our futures, but we'll see. Not much out there that really stands out as something that's going to move us a lot. Earnings, just Newmont Mining's coming up here. I do have an article on Boeing dividend money is cheap. It's pretty interesting because Boeing's been criticized for not paring its dividend and for borrowing more money. And plain and simple, if it can borrow the money cheaply and pay off debt, it shores up its balance sheet. It's obviously going to have some type of I'm trying to find the word to say. It's going to have some type of blowback, or it's going to have to do something such as giving away inventory to pay back some of these big airlines that have had so many problems with them. If it cuts its dividend, it ruins itself for some of the funds that it may be in. So I disagree with this article, but I want you to read through it to see how ridiculous that they think they're borrowing money so as to not cut their cut their dividend. And it just, read through it, give yourself a thought process on what you think, but I think you're going to see that I think you're not going to agree with it. Our election year, I found this in 2 different places. I had a client send it to me. Election year, facts about markets in a presidential election year. Past performance does not predict future results. But what was I going to say? Fact 2, technology. Oh, here, fact 3 is a big one. The S&P is in positive 16 out of 23 presidential elections since 1928. So in all essence, 2/3 of the time the market's positive. The Dow's increased an average of 10.1% election years, which is interesting because no one really follows the Dow or will trade it. Fact 7 is most important. The S&P 500 has an 86.4 success rate at predicting a White House win. Historically, if markets were down the 3 months leading up to the election, the incumbent often lost. It's really interesting just to see these not really important facts, but just some abnormalities that are occurring in regards to the election. I found an interesting article from someone that obviously trades Apple, and I think it's pretty weak, but it's an article with tons of information on why he thinks Apple will underperform the markets in 2020. Yet he's still investing in him and probably investing for his clientele, but obviously he is not one that has been in Apple, in the last 10 years. Hasn't seen the movement in Apple, hasn't seen the shift moving away from their services to boost their bottom line. Pretty interesting article, tons of information, but it's someone who lacks experience in trading in the market over a period of time. I think that experience is what he does not understand. All right, what's next here? Facebook. This is one that I think I gave you a couple. Nope, this is on the 14th. Interesting about Facebook, it's one that I sit and I follow Facebook. We actively trade Facebook. Very interesting article to understand why Facebook would be a better opportunity than Microsoft, Apple, or Google, especially since it can be the next trillion-dollar company. I just keep following it. You hear the law of big numbers, but boy, they haven't even tapped into some other revenue streams. What a beast this is. Really, their biggest concern is litigation from the government, trying to break up a company. Again, that is so far out in time because that would be caught up in the courts with the lawyers on the fact that they are not in a monopoly type situation. And so all they're doing is they created a company that, plain and simple, has made a ton of money and was one of the best products out there. And then I'm re-putting in here the Disney one, streaming the theoretical window and the long-term thinking, understanding why we're in Disney and a longer-term matter of what we're looking at and why. Please do read through the Disney article so you can understand why we're sticking with Disney and why we believe in it. Guys, I hope you enjoy your day off on Monday. I will get this posted here shortly. Enjoy your Monday off, and we look forward to seeing you Tuesday evening. Talk to you then. Bye-bye.